Morning, everybody. This is Josh Shanley with Income for Life, Harrisburg, and Capital City Investments. And this is part two of a three-part video series that we're putting together on why now is a good time to be investing in real estate. Either, if you're an experienced or beginning investor. And we're starting off this one with kind of just a follow-up or a continuation of the historical lessons that we covered in the first video. And it's just a simple quote by Warren Buffett. And the quote reads, "Be greedy when everyone else is fearful, and fearful when everyone else is greedy." And basically right now, everybody is fearful about the real estate market. And if you follow Warren here, he's saying to be greedy, which means you should be out acquiring property now because everyone is fearful, and you want to kind of go against public sentiment, which we talked about last time. So, just a lesson from another billionaire. Obviously, he's had a lot of success, and I think that's how you can have success, is by following in the footsteps of successful people. So today we're going to be talking about the strategy that we teach our clients to use as their primary focus, as their primary strategy to build a good foundation. And it's a rent-to-own strategy. And so many of you maybe know about rent-to-own, maybe know it real well. Some of you maybe know a little bit. Some of you don't know anything about rent-to-own. And this is just going to be an overview in a 9-10 minute video. We're not going to go into excruciating detail, but it'll give you an overview and an idea. So the overview here is that we buy nice homes in nice neighborhoods. We offer them on a rent-to-own program to a tenant buyer, and the program is designed to help them buy the house. The tenant buyer wants a home but can't qualify for lending. As I'm sure you know, the mortgage market is drastically different than it was a few months or years ago. They move into the home immediately with a lease option agreement, and they have the pride of home ownership. With a rent-to-own program, investors are positioned more like a bank than as a landlord, and that's very powerful. It's a very different relationship, and it's in my opinion, it's a much easier relationship to manage than that of a landlord. We're going to define some key points of the rent-to-own program. First one is the upfront option payment, and that's the amount that the tenant pays you upfront before renting. Our goal is to collect 2 to 5% of the price of the home upfront, and the upfront payment is non-refundable if they don't buy. So when you get that payment, that's cash in your pocket. You can reinvest it. You can put it into savings. You can do whatever you want with it. Now, to avoid taking advantage of our tenant buyers, we usually say something like this before we execute this. If you're not 100% focused on buying this home, you shouldn't do this program with us. And because we don't want to be taking advantage of people, we want to help people buy a house. One of the reasons I love this program is it's a win-win. The investor gets a good investment, and we help people enjoy the American dream, which is home ownership. Okay, the monthly rent, the total amount of monthly rent you receive from your tenant every month. Everybody understands rent. In our program, tenants are responsible for paying all the utilities plus the rent, and they're also responsible for minor repairs. Also, a note here is because we're offering something special, we typically get 10 to 30% higher than market rents, and that ties into this one, which is monthly credits. We do offer monthly credits, and basically that's the amount of money your tenant earns each month to be applied towards the down payment of the home if they buy the home. The tenant only earns the monthly credit if they pay on time, and if they don't purchase, the credits are not refunded. Okay, it's just like the down payment. They don't get that back. It's extra cash flow for you, monthly cash flow, cash flow, and you only have to give them credit on the end when they purchase, and it's only earned if on time. So it's that it's kind of that dangling that carrot in front of them to make sure that they're taking care of their side of the agreement. The option price, okay, that's the price your tenant will pay for the home if they buy it. We usually do 24-month options, sometimes 18, sometimes 12 or 13, but this price is set up front. So if your tenant exercises their option on your property, you're required to sell the home to them at this price, and it's the anticipated value of the property at the end of the lease agreement. In central Pennsylvania, we are still seeing appreciation, and we base it on I would say a little bit aggressively, but nothing that is unreasonable. We also help the tenant fix their credit and get the loan for this option price. A great thing about this rent-to-own program and the income for life concept is that you get 5 income streams from each property. So each property is its own little business, its own little income provider. So we've got the upfront payment. That's the cash upfront, that 2 to 5%. And you can do with that what you want after you receive it. You've got monthly cash flow. I'm going to show you an example in a little bit here of a really high monthly cash flow. It's great. And it's a net monthly cash flow. We've got appreciation. So from the price you buy it to the price that the tenant buyer is buying it, you've got appreciation. You've got tax deductions, interest on the loan that you're paying. You can depreciate the property, and there's all kinds of other business deductions that you can take just by having a real estate investing business. I'm not an accountant, so you would definitely want to talk to your accountant on all the deductions you'd be able to have when investing, but that's a huge plus. And then you have the mortgage pay down. Each month you make a payment on your loan, you're paying down the principal. All right, one thing that we offer to our clients, our Income for Life clients, is we get lots of referrals, and through the marketing we do, we get lots of people, tenant buyers, looking for houses. So we interview, qualify, and show them homes that match both their criteria and our Income for Life criteria. And then we collect their money up front, we negotiate the lease and get them ready for their move-in date. And then our investors, from their couch if they like, okay the deal. They go to closing, they close on the property, and they start collecting money. So they've got somebody in the property from the day they buy, which is great. You don't have to worry about, am I going to be able to place the tenant? What's going to happen there. So we're going to take a look at an example. This is a property in Central Dauphin School District. It's Harrisburg, Pennsylvania. As you can see, it's a lovely home. It's a 4-bed, 1.5 bath, split level, with a basement and a garage. What you can't see here is on the back, there's actually a covered porch and a 3-season room. It's got a nice secluded backyard. It's in great condition. Our investor purchased it at a purchase price of $167,900. They got an upfront option payment from the tenant of $4,000, a pre-agreed upon 2-year buyout price of $188,588, monthly cash flow of $398,000, and the locked-in profit. That number is simply the purchase price or the pre-agreed upon buyout price less the purchase price. So that's the spread there. That doesn't include the monthly cash flow. So when we crunch the numbers, we take that locked-in profit plus the cash flow. This was a 24-month lease option agreement. So we take the $398 times 24. Total profit, $30,240. This actually does not take into account several of the factors, several of those 5 that we showed, just because for simplicity's sake. But this doesn't take into account tax deductions, principal pay down, mainly those 2. So this investor actually put 20% down on this property. We do have programs. We have lenders that are still doing 10% down loans. But this person in particular put 20% down. And I'm just going to note here that if you can't qualify for a loan right now, but you still want to invest, we do also have programs where you can more passively invest in real estate using the same kind of program, but you're doing it with us. And we can explain that, or we will explain that at our free seminar coming up in a week or so here. So. But in this example, the person put down just over 20%, and that gets him a 2-year return of investment of 78%. Now, I don't know about you, but I'm not getting that in the stock market, and it's very difficult to get that. That equates to I believe 39% annually. So 39% per year return. Pretty fantastic. We're just going to finish up with a quote from this is from the investor that bought that example property. He said, I was reading and studying in real estate for 2 years or more. Was trying to find a way to get started as an investor. About 6 months ago, he got an email from Income for Life Group, Harrisburg, that's us. And he's 51 years old and thought maybe this was somebody who could help him get started, figure out how to free up the money to get started. We helped him free up the money. He's able to buy this property, and now he's in the process of buying 2 more. And he says, thanks, Josh. So I appreciate you taking the time to watch this video. If you're interested in learning more about this, I encourage you to go to the link at the bottom of this page. Registration for our seminar is free. However, seating is limited, and the spots are filling up. So I encourage you to do that right away, and I hope to see you out at the seminar.